NKLA stock, or Nikola stock, is the topic of today's presentation. And frankly, I can't figure out why anybody would click on this video, because it should be blatantly obvious that this isn't a company that you should ever consider investing in, and that's on the short side or long side, because you will find that the irrational herd out there will outlast your margin limits by a mile. So here at NKLA, we've been warning retail investors about bad investment ideas for a very long time, and back when Spaxs debuted in the summer of 2020, we wrote this piece here, How Spaxs Reward Everyone Except Retail Investors. They were quite popular. We ended up covering about 100 of them, and every single one of those except two we were avoiding because they were just dreadful setups. And when you look at most SPAC decks out there, we like to always go back and see what a company promised in their SPAC deck and what they've actually delivered. Most of them are so far off, it's just ridiculous. And in this particular case, the founder and person who put together was ultimately responsible for that SPAC deck. I'm sure that there were lots more people involved, but he was found guilty of fraud over statements he made while CEO of Nikola. So a lot of people may consider that spilled milk. For us here at NKLA, we understand how startups work, and it isn't just the person at the top. This sort of culture permeates startups where everybody wears multiple hats and they're all closely involved in what happens. So that would be an immediate reason to avoid this stock, and not just this electric vehicle stock. But you see this article here we wrote not too long after that SPAC piece, a warning about electric vehicle stocks. And if you look at the ones, you can go into our tech stock catalog. Our team did a great job of putting this tool together. It's a Excel spreadsheet with 460 tech stocks. We simply filtered there on the subcategory electric vehicles, and look, we're no surprise avoiding them all. And you can see how these have performed over time. They've lost most of their money, Nikola included. I think the last time that we looked at Nikola, they had a share price at around $26 a share, whilst the SPAC offering was at $10 a share. That's how much this company was overvalued, and we warned investors about that. Now, the second showstopper for this company is just go to their website and see this comment here about how they have hydrogen fuel cell EVs now in production. Well, we wrote this piece not too long ago, and anybody that's interested in hydrogen investing really needs to look at it, because the thesis of hydrogen doesn't make sense when you look at the basic principles of energy. Now, there may be some use cases, some argue long-distance trucking, that could be viable, but we're going to talk about why, in the case of Nikola, it isn't. And showstopper number 3, this is a classic that affects not just Nikola, but other electric vehicle companies as well. You can see here that they're selling trucks for more or less than they cost to produce. And people always say, well, what about Tesla? Yeah, what about Tesla? Look at the statement below there, the table that shows how Tesla had positive gross margins even as early as 2011. So what this comes down to, when you have a company that's not selling a product for more than it costs to produce, they're subsidizing it, and the question is, can Nikola survive? Well, when you look at this simple chart from Yahoo Finance here on the left, you can see that revenues are trickling in, but they're burning a lot of cash. And contrary to what you may read on Twitter, bankruptcy is not a good thing for a company. It's the ultimate bad thing that can happen. And all you cheerleaders out there and your short squeeze rumors, those plus $5 might get you a Happy Meal. The only consistent numbers we're seeing at Nikola are losses. And how long will it be before they need to raise debt or dilute shareholders? Well, they're already doing that. And here you can see how just over the past quarter, shares outstanding increased 30%, 50% over the last 2 quarters. They're just handing this company away. And when they actually need to raise money, which they will need to do soon, one wonders how they're going to go about doing that. We look at operating cash flows to see how much money this business is burning. We see they have long-term debt and finance lease liabilities around $350 million. cash around $226 million, no more than a few quarters left before they need to raise capital, just based on the cash burn you see in the above table. And the company all but tells you that here. They say there's substantial doubt about the company's ability to continue as a going concern through the next 12 months from the date of issuance of these consolidated financial statements. That's taken from their last 10Q, and indeed they're right. Now, when you look at share price performance, this is rather interesting. We see lots of green bars there recently, and a share price that's going up, and you can see how it's been sliding over the past year. Lost nearly 78% of its value, but recently it's perked up, and perhaps the reason for that happens to be that shares are now trading below $1 and they could potentially be delisted. Now, many people think that means that the shares will simply become untradeable. No, they're actually demoted to the over-the-counter market. But you see here that shares are being pumped up, and that's a good thing for Nikola because they may be delisted or they may have to do a reverse merger in order to keep from being delisted, which will confuse everybody who isn't paying attention and think that the share price is going up or think that actually affects anything. It really doesn't. There's a lot more to be concerned about for this company than just a delisting. Here you can see when we consider the stock price movements and what's causing those. Here we can see how this simple press release about Nikola expanding their dealer network into Canada for its electric trucks sent shares up 5% in morning trading. The same release from Reuters here talks about how they're facing issues, including 2 fires within a week in September involving its vehicles that are said to be related to batteries. Well, look at this article here. It talks about how Nikola moves to liquidate their battery pack maker Romeo Power. They originally spent $144 million to secure their battery pack supply chain by buying Romeo Power. Read this article. It's eye-opening. What they bought was essentially junk, and that's why they're liquidating it. So that wasn't a very smart move by management. And when you look at the quality of the vehicles in the field, this was taken from that Reuters article, and it talked about how earlier in August, the company said it was recalling all battery-powered electric trucks that it had delivered till the date after an investigation revealed coolant leaks inside a battery pack. And this supplier, Romeo Power, they're liquidating. The whole thing just stinks. And the CEO told investors that the battery electric truck recall would not affect the production or deliveries of its fuel cell electric vehicles. You see the pivot there? Since they use a different battery pack from a different supplier, the company plans to begin deliveries of the hydrogen fuel cell vehicle in late September, in early October, he added. That sent shares up 20%. This essentially bad news was spun into something positive, and retail investors just ate that up. When you go on Twitter and you look at the sort of cheerleading that's happening, I pulled up this tweet. I just quickly looked because I already knew the answer. This is being pumped hard. And the first cheerleading tweet I found here was somebody saying they locked in their spot for a Nikola Badger. They say, a few years ago, if you told me I would have a battery-powered truck in the garage, I would have laughed at you. Now I can't wait for it to get here. And there's this picture of a really cool-looking vehicle. Well, look in the upper left here, car and driver. The Nikola Badger is dead before the electric and hydrogen electric pickup truck even arrived. It said from Car and Driver, we had only seen renderings of the truck, and indeed you did. And it said that Nikola had announced some tantalizing, albeit unsubstantiated details. Of course, that seems to be their playbook. And you see here, generative AI tells us the Nikola Badger was a battery electric and hydrogen fuel cell electric vehicle pickup truck announced in February 2020, expected to be available in late 2022. However, the project faced setbacks and the Badger will no longer be produced. Nikola has stated that all reservation deposits will be refunded. So what's this monkey on Twitter talking about? You need to pay attention to cheerleaders who, for whatever reason, are saying things that are blatantly untrue in an attempt to pump a stock. Now, you may be tempted to short Nikola, and this is what we wrote about back in May of 2020 when we warned investors about this stock offering. We said here, some people might suggest shorting a stock that appears to be wildly overvalued, but that's not a good idea for amateur investors. Rest assured, the herd is capable of demonstrating far more irrationality than your margin limits, which is how short squeezes happen. So the best thing that you can do is just walk away from this junk. It's almost certainly being pumped right now. Electric vehicle SPACs, they were a dime a dozen, and it shows today. There are far better options out there if you want exposure to electric vehicles than this absolute mess. And it goes to show that consistently we see the same conclusion. Producing vehicles, electric vehicles, at a positive gross margin is tougher than it looks. Now, I've put up another video here for you to watch. Before you click that, please click the logo on the right to support our channel. We don't run ads. Thanks for taking the time to watch this today.